Hey guys, welcome back. I hope you had a really great day trading today. So today was Tuesday, August 27th, and tomorrow in after hours, we do have NVDA earnings. And for SPY and QQQ, that is a big deal. Most of the year, the gains that we have seen have been in big tech driven by AI. So NVIDIA, a big deal tomorrow, and in the second half of the video, I will give the implied move for NVIDIA earnings. And we did trade pretty sideways today ahead of those earnings. SPY opened with a small gap down. We dropped a little bit, but then we came back up, back above the 35 EMA. You could see right here we found support on the day on the 35 EMA on the 30-minute time frame, and we did close green. We did close up 0.14%. And in SPX, we saw the same thing. We did get that gap underneath the 35 EMA. We came up, we closed that gap, and then right after that, we stayed really close to the 35 EMA and closed up 0.16%. And VIX came down 4.46%. And both in SPY and SPX today, we did trade and close completely within the implied move today. So you could see we had a very interesting trading range with a bull gap underneath the implied move, a bear gap above the implied move with all-time highs just above that, and we stayed right in the middle there. And QQQ, we did open QQQ with a small gap down underneath the 50-day moving average. And we did actually come down pretty close to the bottom of the implied move. 471 was the bottom of the implied move, and we got to around 471.74. So if you snagged some spreads down here at the bottom, 471, 470, those would have paid on the way back up. And we got back above the 50-day moving average, and also we did open right at this level, which is 474. I am going to zoom out real fast to show that because that is a important pivot support level. And too far, I went to the wrong time frame. Let's get back to the right one. This is the 1 hour time frame, and 474 right here we saw as support. This was in June, that last week of June, and then we saw it as support right here, right before we gapped underneath 474. Then when we came back up, we saw that level as resistance, and that gave us that big drop down. And then just recently we came back above, and we are sitting right at that level. In fact, we opened right at 474. So that is a combination of levels that caught us, the 50-day moving average and 474. Let me zoom back in. And from there, we did come back up. We filled the morning gap. And here also, we got right to that 35 EMA, and that is right where we closed. So both SPY and SPX and QQQ, I said both, but all three closed right at the 35 EMA. QQQ did close up 0.3%. VXN closed down 3.06%. And we did stay completely within the implied move here. And then IWM was actually our biggest loser of the day today. We did open with a gap down all the way to the bottom of the implied move, which was at 218. From there, we did come back up to the 35 EMA, got pushed back down to the bottom of the implied move again, and then from there, we came up and closed right at the 30-minute 35 EMA. So that is the fourth one that is right at the 35 EMA for the day. So we really had a lot of neutral closes today. IWM did close down 0.78%. RVX did close down 2.39%, and here we also did close within the implied move. So here, if you did sell 218, 217 bull put spreads, then at expiration, those did close up 100%. And DIA, we did close completely flat here, up 0.04%, and we did open down just a little bit. It's a little bit hard to read because we set this one up a little bit different, but we did open with a little gap down, came back up and filled that gap, and then from there we dropped down to the 35 EMA on the 30-minute time frame. We bounced on that and we did close up just a very little bit, 0.04%. So that 35 EMA on the 30-minute time frame, in everything that we went over today, that was a key player and a key level, and we closed above it across the board. So overall, we did have a very neutral day. So markets bracing for NVDA earnings tomorrow, and we also do have PCE on Friday. All right, that's enough about today. Let's go check out tomorrow's levels. Alright guys, so before we head into tomorrow's trading ranges, if you find these videos useful, if they help you to choose better strikes and take better trades, and you love that I break it down every night, then please make sure to give this video a like. Don't forget to subscribe and turn on notifications so you don't miss out when I do post new videos. Leave me a comment down below if you have any questions. I do try to get back to all comments within 24 hours, so if something I'm saying doesn't make sense, then let me know and I'll try and clarify it. And if you took a really great trade based on something I said or something that I taught you, then an easy way to give back and help support my channel is to use that thank you button. And if that's not something that you're able to do, then another way to support my channel is to share it. All of this helps so that I can keep bringing you guys really awesome content. Alright, so starting in SPY, tomorrow's implied move is between 556 and 567, and that is from options. The 30-day average volatility is a bit wider, 550 to 573. And then the implied move on Thursday's contract is between 554 and 568. And to the upside, the first level to look for is going to be the rest of this down gap right here. This is the down gap that we saw off of all-time highs back in July. Was it July or June? It was July. July 16th, we made all-time highs right here. We gapped down and we have been chipping into that gap ever since last Tuesday, and we've been making our way in and we keep getting rejected. The rest of this gap is right here. 563.83 is the bottom, 564.51 is the top. Then all-time highs are at 565.16, and if anything is going to get us above this gap, NVDA definitely has that power. So the top of the implied move for tomorrow is 567, and that is the first time we're seeing the top of the implied move above all-time highs. And then on Thursday's contract, 568. And then to the downside, we do have the 35 EMA. That is just underneath us. We have been trading very close to that level for the past few days. And let me just get this line right here. So 35 EMA just underneath us. Ever since that up gap from Jackson Hole, we pushed up into this gap, and then that 35 EMA was our support, and we've basically been in between those two levels. If we do break that, then the next level down is 556. That's the bottom of the implied move on tomorrow's contract. We also have the Jackson Hole up gap. That was from last Thursday going into Friday. If we do drop, then on tomorrow's contract, this Jackson Hole gap would definitely be a support level to watch. I would be surprised if this didn't hold going into NVIDIA earnings and having the bottom of the implied move right there. And then the bottom of the implied move on Thursday's contract, 554. And then underneath all of that, we do have the 50-day moving average, and then the 30-minute 200 moving average projected out does go through the bottom of Thursday's trading range. So if you're bearish heading into NVIDIA earnings, this 30-minute 200 moving average could be a good target to look to. And then SPX, the implied move over here is between 5,600 and 5,655. And the implied move for tomorrow in SPX is actually much smaller than SPY. And I'm not sure how I feel about that. I don't make up these numbers, I just read them straight from options. But SPX's implied move is just 0.47%. And SPY, the implied move is 0.87%. So honestly, I don't know which one I would trust. It's very rare that we see a disconnect that big, but taking it back to SPX, let's look at what is around that. Actually, let me finish going over the actual trading range. So 55.20 to 57.30 is the 30-day average volatility. And then Thursday's implied move is 55.65 to 56.85. And because tomorrow's implied move is so small in SPX, it almost makes me want to look at the next day's strikes. And then to the upside, the first level to look for is going to be the top of the implied move, 56.55, and we do have the rest of that bear gap off of all-time highs in July, and the top of the implied move is aligned exactly with that level. And then just above that, between the top of the implied move for tomorrow and Thursday, we do have all-time highs at 56.69.67, and of course the top of that down gap is just underneath that. And this right here is the bear's last stand, because if we get above this bear gap, we are back above all-time highs, and we're not necessarily bullish yet here in the moving averages, but we will have had busted open the last bear gap. And then to the downside, we do have the 35 EMA. We've been trading very close to that level ever since that up gap from Jackson Hole right here. We did push up into this down gap and then drop down to the 35 EMA, and that's pretty much where we've been staying. And then the bottom of the implied move for tomorrow is 5,600, and then on Thursday's contract, 55.65. We do have a gap that I didn't put in. I know I had this in here. I think I must have just erased it. And that is the Jackson Hole gap. And there you go. And that is from last Thursday going into Friday. So honestly, rather than using the bottom of the implied move, if we do drop tomorrow, I would likely use this gap instead. This trading range just looks way too small, especially heading into NVDA earnings. So the bottom of that gap is almost lined up with the bottom of Thursday's implied move at 55.65. And we also do have this support level right here. This was last week, Thursday, and then that next day was Jackson Hole. So that is 55.58. Underneath all of that, we do have the consumer credit gap with the 50-day moving average. The 1 hour 200 moving average, we definitely need to keep an eye on this time frame, specifically because that moving average is still pointing down. And then also the 30-minute 200 moving average is just underneath all of it and starting to point up. So tomorrow's trading range looks pretty wild, and a lot of it is going to be riding on NVIDIA. And then switching over to QQQ, the implied move over here is between 470 and 484, and that is from options. The 30-day average volatility is about twice as wide, 464 to 490. And then on Thursday's contract, the implied move is 468 to 486. And to the upside, the first level to look for is going to be 484. We did see resistance there last Thursday, and that smacked us back down to the 50-day moving average and 474, which I'll show in just a minute. So 484, first level to the upside. 486 is the top of the implied move on Thursday's contract. And above that, we don't actually have a whole lot within the trading range. This down gap right here, I don't have in place. Let me go ahead and put that in there because I think that might actually line up with yep, it's right at the top of the 30-day average volatility there. So right at the very top of the trading range, we do have another bear gap in the Nasdaq. So that is the upside. And then to the downside, we do have the 50-day moving average. The momentum there has gone completely flat. And then just underneath that, we do have 474, which is a level we've been seeing a lot over the past few months. I don't know why I keep going to the 1 day. I'm trying to get to the 1 hour time frame. Okay, so right here, we did have 474 as support, resistance, and then right here, we are back at that level. So 474, definitely a level that should be on your chart, because if we do drop underneath it, it can turn back into a resistance like we saw right here. And since we're on the 1 hour time frame, you could see that 1 hour 200 moving average still pointing down. And Stupid Willie down here is showing a red signal line. We have not crossed back up. We definitely could pull back towards that 1 hour 200 moving average back into this consumer credit gap. This chart looks so messy right here, but if you've been following every day, then you shouldn't be surprised by anything in this trading range. And then if we do break the 50-day moving average and 474 level that has been holding us up ever since last week, then we do have the 30-minute 200 moving average. That lines up right with the bottom of the implied move at 470. 468 is the bottom of the implied move on Thursday's contract. There's that downward facing 1 hour 200 moving average, the consumer spending gap, and the 4 hour 200 moving average. So if we do drop, we don't even have to drop very far before we find some support levels, and quite a lot of them. And then IWM, the implied move over here for tomorrow is between 215 and 222. That is from options. The 30-day average volatility is about twice that, 212 to 225. And then on Thursday's contract, the implied move is between, it looks like I didn't quite finish this chart up. Let's put that in. So 215 to 223. And to the upside, the first level to look for is going to be the down gap that we saw today. So maybe even before that, looking to the 35 EMA. The 35 EMA is always an important level, especially when we're trying to find direction. It defines the uptrend or the downtrend beautifully. So 35 EMA, and if we do see upward momentum, the next level is this up gap. The next level is this down gap from yesterday. And then above that, the top of the implied move is 222. And right above that, 223 is the top of the implied move on Thursday's contract. And that lines right up with this resistance that we saw on Monday. We gapped up on Monday, saw resistance here, and got pushed back down. And then to the downside, the bottom of the implied move is 216. The bottom of the implied move on Thursday's contract is 215. And then we have the 1 hour 200 moving average going right through this consumer credit gap. And the momentum there is completely flat. And underneath that, we do have the 30-minute 200 moving average. And remember, to be bullish, we need to see the smaller time frame moving averages above the bigger time frame. So the 30-minute being underneath the 1 hour is still bearish. That could definitely pull us down. We did get the 30-minute 200 moving average above the 50-day moving average, and that was bullish. But this right here is still bearish. We are not out of the woods at all yet. So definitely keep an eye on the order of the moving averages. And once they're straightened out again, go long. And just looking a little bit deeper, this just caught my eye. We do have this little down gap right here and this big up gap. This is another island bottom, this is an island bottom right here. Those do tend to fill. So if you're looking further out, if we start to see downward momentum and you're looking out maybe into next week, this gap right here might be a place to look for. And then lastly, we have DIA. And DIA, the implied move over here is between 408 and 418, and that is from options. And the implied move for the week is between 406 and 418. And so far this week, we have been trading between two resistance levels. And zooming out for just a minute here, right here on July 31st, we did see resistance right here before that big drop. And then a little bit before that, this is July 17th, we saw resistance right here. And this week, we've been trading right between those two levels. We opened the week near the mid-July resistance, and then we dropped down to the later July resistance, right in between those two levels. So if we do break above that resistance that we couldn't get above at the start of the week, then the top of the implied move is at 418. And then just underneath where we closed today, 35 EMA. And then if we break that, then we do have 408 as the bottom of the implied move, and also that Jackson hole gap from last Thursday going into Friday. So not a terribly difficult trading range over here. Only a handful of levels to know, unlike some of the other ones we've been looking at. And then before we call it a night, let's go ahead and look at NVDA. We do have NVDA earnings tomorrow in after hours, and we are, according to options, looking at a 11% implied move, $14 in each direction, and that takes us between 113 and 143. And then we do have the 30-minute 200 moving average right here. You could see it was a previous resistance right here when we were underneath it. Now we're back above, so this could be a support level right here. We also have the 1 hour 200 moving average underneath that. And I do want to zoom out to the 5-year 1 week time frame right here, because I thought this was really interesting. And when we did have that big drop off of all-time highs, this is why the 35 EMA is such an important level across time frames. 35 EMA on the weekly time frame is exactly where we bounced. And to be clear, this level is not within the implied move tomorrow. I just felt like throwing that in there because that is just amazing to me. And that 35 EMA is right here, pretty far outside the bottom of the implied move. But if we do drop, then make sure you have that 35 EMA going forward on your charts. But for this week, for earnings, 113 to 143. So if you're getting strangles or straddles, if you're going to play earnings, then these are the levels to look for. We also have two resistance levels to the upside, and that goes back to July 3rd. No, this is July 11th right here. And then all-time highs are actually within the implied move tomorrow, which go back to June 18th. So there you have it, guys. So much to look for tomorrow. Have fun tomorrow. Trade safe. Make sure you take profits when you're up. And I'll see you guys tomorrow.